Good morning, good afternoon, good evening, Alpha Traders. Here we are for our next episode of Crypto in Clown World, where gas prices are spiraling out of control. Although oil did go down today, I believe it's about 115 a barrel. Let's see, where are you? That dropped even more, 110 a barrel. Good. Fuck these oil mother junkers. Let's see here. So, Bitcoin. Bitcoin. I talked yesterday about there being a very tight daily range. And I was talking about this right here, about 2 o'clock, right in this area. And I said, the bulls are going to try to push up and close above where the new daily range is. The bears are going to try to keep it below. Bulls walked it right up. Look, the first 15-minute candle of the day got a wick to the downside of the day price action volatility range. I said it was going to be $100 wide. What did it end up being? It ended up being, let's see here, hold on. Where's it? What in the heck? Oh, God, because we got the new daily. I'm like, what the hell? Where's that tight range? Guys, it was $80 if I remember correctly. Let's see here. 624. Yep, about $80 range. Once again, got really close. And said that the center of the range was going to be right around 39.8. Yeah, it was a little lower, right? Top side was at 38 or 38.7. I was about $100 off. So I was about $20 off on the range, $100 lower than I thought it was going to be. But look what Bitcoin did. Bitcoin used that tight daily range as a launch to trend today, right? So we got a wide weekly range telling me the weekly is going to trend, or the weekly is going to have a range, and I'll get to that in a second again. But the daily said, hey, we're trending today. Bitcoin used that volatility and pushed right through all the overhead resistance of all the macro time frame volatility ranges. Beautiful thing. I was talking to somebody yesterday as well. After this pump happened, I said, now at this point, because they were like, oh, we're going to the moon. I was like, no. I was like, look, we just made a 2 standard deviation move to the top side. You got to understand the probabilities. There's a 95.4% chance Bitcoin closes the daily below that. Did it? It sure the hell did. Why? Because all these markets are nothing more than probabilities, percentage levels. This is what a volatility trader this is our bread and butter, understanding these levels, that there was a super high probability. Guys, you know how many people bought this top, right? Could it work out for them? I'm not saying it can't. But why? Especially during that intraday, if you were to get into a position long here, super bad idea. A very bad idea. This is why people buy tops. This is why alpha traders don't buy tops. This is why alpha traders mainly trade low time frame volatility. This move right here, this was such a beautiful thing on the lower time frames. Incredible trade. Figures. All right, we're having some great moves. I'm not even trading, which is fine. Once I get set back up at my new property, I will be trading again. So let's see here. But I told this person, I was like, now that we hit this first standard deviation or second standard deviation, and right above it was the top of the monthly range. Bottom of the monthly, center of the monthly, top of the monthly. Top of the weekly, center of the weekly, bottom of the weekly. Bitcoin said, screw you, wham, or shot right through it all. The bears are going to defend this area like their life depends on it. Right up here, 42,170. I told this person. Now, and I was talking to them about 10 o'clock last night, and Bitcoin was right here. What do you think price action is going to do then, Bilbo? I said, well, at this point, we're going to probably range in between the top of the monthly and the top of the weekly, right? I said 41.5 to a little over 42. Pretty much did it. Got a little higher. I think we got up to like 42.6. Bottom line was, though, I was like, bro, we're at the second standard deviation. At this point right now, this price action, the rest of the day is just going to go sideways. No, no way. Not after that. Not after a pump like that. It's probably going to BART. Like, fucking dude, you can get that out of your mind. That's all bullshit. He's like, well, it's going to pump again, though. I'm like, no, not today. It's not. There's a 95.4% chance it says it's not going to pump anymore. So you can take your 4.6% chance and long the top up here, or you can wait until we get the new daily range that you know needs to be tested down here at about the 41.5 area. All right, 41.5 area. So I look for that to get tested. And we're going to look at the volatility charts and the returns, see what's really going on here in a second. But when I talked in the stream yesterday, I said I can guarantee you one thing, 100%. Bitcoin's either going to go up or Bitcoin's going to go down. That 100% I can guarantee is going to happen. But I said another thing I'll tell you that's going to happen this entire week. Bitcoin's either going to, and at the time I was telling this, there was a doji in between the weekly 68.3 right here, right? That price action was right in the middle at about 38, right around 39K. And I was like, we are probably the rest of this week, we're either going to range in between the top side of the 68.3 on the weekly and the first standard deviation to the downside, or we're going to range in between the 68.3 Laplace to the downside and the first standard deviation to the top side. All right. The latter is what happened. All right. 68.3 to the downside on Laplace. First, we're a few $100s above the first standard deviation to the top side on the weekly. If we close today, we closed yesterday's candle, right? The one we just closed. It closed above the first standard deviation. So, what am I looking for? I'm looking for a test at 41.5, right? What is right at 41.5? First standard deviation, that blue dot's at 41.6. I want to see Bitcoin on this first 4-hour candle wick down, test that 41.5 area that's the top of the daily range, then pull back up, close that first 4-hour candle above 41.6. If that happens, and specifically if we close this daily candle that we're in right now above that first standard deviation, we can make a move up here to the 95.4 Laplace and the second standard deviation on the weekly for a little over 45K. All right, we're talking 45.2 and 45.5. They're pretty much right on top of each other. Look, they're spread out to the bottom side. I talk about this all the time. When you get these new weekly candles, you got to look to see what side is tighter. And I'm telling you, it's like 80-90% of the time, price action is going to flow that way, right? Most of the time, that price action is going to flow that way. Let's see here. Just like when we opened this candle right here, right? On this weekly, it was really tight to the top. Didn't quite make it there, but it was wider on the bottom and it flowed to the top side. Okay, let's see here. Go over here real quick. So this is the daily chart with the alpha trading ultimate power mean indicator. Okay. We're back up above the reverse wave trend, the white dotted line. Again, Bitcoin has been pushing through it. This is the third time over literally since the beginning of February, right? Since the beginning of February, Bitcoin has made 3 pushes to the top side of that reverse wave trend. Where have we been rejecting from? Pretty much the 99 length variance log moving average. That's this pink line right here. Rejection. Didn't quite make it there that time. I'm still going to call that a rejection from that area though. Rejection. Got a couple wicks above it, right? But boom, sent it right back down below. Now look where we're at again. So what do I think is going to happen? I think we're going to push again after we test that daily range. The bulls are going to push this thing back up to this area, right? 43.7. 43.7. Now, take a peek over here. What's at 43.7? What is around the 43.7 area on today's candle? The first standard deviation, normal distribution? Huh? 43.7. 43.715. 43.7. Okay. They're in the same area. I'm looking for that to get tested again. Can the bulls close a freaking daily candle above this 99 length? If they do, if they can close a daily above here, it's probably going to go up here and test this reverse fissure, almost 46K, 45,869. And that would be a new local high, right? For a close, especially if you can close up here. Had a wick right here up to it, right? That reverse fissure is right at the top of this wick right now. So it's going to be important for the bulls to see if the bulls can close today above the first standard deviation again. Or does Bitcoin shock everybody and do another 2SD run? They do another 2SD run. It's up here at 45.6, right? 45.6. And what's at 45.6? Pretty close. 45.8. Oh. So if it makes another second standard deviation move today, not only will it probably close that daily candle above this 99 length variance log return moving average. Yes, for all you traditional TA traders out there, I did not say exponential or simple or any of the other crap you want to use out there. No, no, no. Log return moving averages, right? The price action follows the returns. Why the hell are you using lagging indicators? It makes 0 sense. Figure it out, people. Figure it out. If you're watching this on YouTube, if you're listening to me for the first time, you're using lagging indicators if you're coming from traditional TA. Everything we have is built on the returns, volatility, probabilities, and statistics. That is the tool belt of a freaking professional trader. Professional traders use these types of indicators, right? These high frequency trading firms, mostly all these hedge funds and stuff, they use this stuff. They use volatility, probability, and statistics. And then they invest a lot of time and resources into making sure retail traders think that trading with traditional technical analysis is the way to go. It's a scam. I talk about it in every stream. I'll probably talk about it in every stream until the day I stop doing this, trying to help you, right? I know at first, right? First, people laugh. People laugh. Then they start to realize as they're losing probably 7 out of 10 trades, but they're calling themselves profitable. It's the internet. People lie all the time. They're going to tell you they're profitable traders. 99% lies. They're not profitable, right? I've seen people that think they're profitable and they show me their P&L. I'm like, how is winning 3 or 4 trades out of 10 winning, man? Are you kidding me right now? And you're getting it, and you told me a month ago you got an account liquidated. It's insanity. There's 3 basic rules that a professional trader follows, right? Number 1, you are never emotionally attached to your trade. It's your job, right? This is how you are making money. The second one is you have to limit your losses. If you're emotionally attached to a trade, how are you going to get out of a position when you start losing? You're not. Without the first rule, you're done already. And the third rule is you got to take your profit. You're like, okay, well, yeah, that sounds easy, Bilbo, but no, it's the hardest thing for traders to do. And that's why you're all out there gambling. Professional traders limit their losses, take their profit, and they're never emotionally attached to their trades. It's the hardest thing for traders to learn. You learn those 3 factors and you start winning 7 or 8 out of 10 trades, you can call yourself a professional trader. You know why? Because the gains you're going to get from those 7 or 8 wins are going to just dwarf your loss. They are going to just be much larger than your losses. Okay, because you're limiting your loss. If a trade does turn against you, right, where 8 out of 10 times you're getting great entries. Bilbo, BTC is very volatile. Sometimes shit happens. If that data set turns against you, just get out of it. Just get out of the trade immediately. No big deal. If you're trading low time volatility, you're down there getting entries on the 5-minute anyway. You know how many trades on the 5-minute you can get in a day? Quite a lot. One or two trades a day, it does not matter. You're just trying to limit that loss. Because just like this happened, right? That can happen to the downside. Right? Say right here, you just, for whatever stupid reason, because you don't know how to read volatility charts and statistics, you short here. You're in a short. And you're like, oh, well, it's walking up. Oh, but I'm emotionally attached to my trade and I know I made a good decision. So I'm just going to hold on. It's going to dump. I just didn't get a good entry. And then you go and you walk your dog, you come home and your account's liquidated. Because if you're not a professional trader, you're probably a degen and you're using leverage. Oh, boy. All right. Let's get onto the main trading chart and see what Bitcoin's going to be doing. So on the 4-hour right here, right, this is where I always start my intraday trading. So I'm looking right now. What am I seeing on this chart? First thing that sticks out to me immediately is volatility has dropped off a cliff. Literally went from 90% to 11% on this new 4-hour candle. It wasn't a steady decline. It dropped off a cliff. What's that tell you? That tells you, ding, 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 volatility is going to fully expand again very shortly. Could be the next 4-hour candle. Look at the correlation. The correlation's already given you a little bit of insight. It's positively correlated. All right. The historical volatility z-score starting to crank back up, right? It's flat right now. It was heading down. Heading down what? Negatively correlated. And Bitcoin predominantly throughout the day had some little rises, right? Just kind of walked around. You can see it right here. Look at these 4-hour candles that just walked up because the correlation started sloping negative, then pretty much just going sideways. It's positively correlated down. It's starting to turn back up. Another good sign. The trend was, or the entropy was definitely heading back into randomness. Strong, right? As it was losing correlation. And you could see there was 3 4-hour candles that kind of started slipping to the downside. If you see this drop back into trend on these next couple 4-hour candles and we get bright blue again, it's telling you, okay, we're trending again to the top side. So you got to watch that. The entropy percentile on the 4-hour, it's positively correlated, starting to expand. That's good for top side. There's no divergence. There's no bear div. There's no hidden bear div anywhere on any of the oscillators. Okay. What kind of divergence is there though? Look at the return oscillator. Right? The return oscillator. The correlation is flashing. I don't have it very bright, but you can see the pink line. It's flashing, right? And so you've got hidden bear. You got a lower low on the oscillator, higher low, or a lower high on the higher low on price action, which is creating that hidden bull div. Correlation is building strong. On this next 4-hour candle, if you see this return oscillator turn up and it stays correlated blue, that's going to be a strong indication that hidden bull divergence, high or low. Yes, you can call this a low right now, especially if the next 4-hour candle starts climbing, right? So really don't call it a low yet. We got to see this 4-hour candle. It could be this 4-hour candle. We could go down real quick and test that 41.5 region and bounce from there and go back over that first standard deviation on the weekly. And then you're going to have a bottom. You got to get a bullish 4-hour candle in there though. And that return oscillator turn up, that hidden bull is probably going to play out. The entropy and the volatility is set up for that. And from what I showed you on the other charts, it sure looks like on the daily, it's going to make another run at that 99 length variance log moving average, right? Talked about that already. And what else is there? First standard deviation on the daily to the top side. There's a lot of confluence up there in that area. The only thing, look how we had an outlier on the 4-hour, right? I was showing somebody this variance. They're like, what the hell's variance? And then I got to explain what variance is. And then you got to explain what an outlier is in statistics. Then I've got to explain, but look how the variance went negatively correlated as it was coming down and it continued to walk up. But then right there where you see the candles coming down, it was coming back down positively correlated. Boop, 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 boop. If this variance turns up and it starts moving for that 43.5 area, I think it was, you're going to see another outlier on the 4-hour. You will probably see this log return z-score. If this outlier right here, if this would have reached into the 99% confidence interval, my bias would be a little less, to be honest, even with the hidden bull. So is what I'm kind of looking for right now is maybe we get a little bullish reset and we get this little bit of a pullback here, right? We get a little pullback just like we did over here. Right, kind of went sideways, had one bad 4-hour candle, but then whoop, boy, it turned right back around. And then it shot up to the top side with that nice move on the 4-hour. We're setting up something very similar. Do we do this again? We could. We could, right? It's all about probability. So I'm watching these standard deviation levels. That's what I'm doing. And right now, where are we? We're inside the daily 68.3 Laplace distribution range. There's a 68.3% chance BTC's data set stays in this range today. Okay, a little bit wider of a range. How much wider? About $700. It's about a $700 daily range, right? You can see this would make more sense to me too. I want to see the top side tested, but getting a wick down to the 68.3 on the daily would be testing the center of the monthly too. Now the ball is in the Bulls' court. Now the Bears got to exert a lot of energy if they want to push down through all this volatility that is below the BTC data set. It can be done. The Bulls just did it. But I don't even have to go look at the buy and sell pressure, right? Especially on the 4-hour. What kind of divs created? It's hidden bull. So that alone right there is probably telling me both of the buy and the sell pressure was probably even, but there was more velocity and acceleration for the bulls. They took over for sure. So good stuff. Good. So we're going to have to keep an eye on that. I do like that there's hidden bull, but at the same time, we got to remember this area down here is going to have to be tested. Either the top of the daily, and that's the top of the weekly right there, or the 68.3% Laplace distribution range to the downside on the daily, that white cross line that's literally right above the center of the monthly range. If I were to say where are the bulls, what area is a higher probability of the bulls defending big time? Right here. The 68.3 Laplace on the daily and the center of the macro volatility range being the monthly. That is a strong area right there. But it would not shock me if it just get a wick down to the top of the weekly. This is the area these bulls have to defend. If they don't, we could possibly see this again, right? We could possibly see that again. Just boom, 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 sideways, and just a slow bleed out after a nice big pump. So we're just going to have to let this play out today and see what happens. Before I drop down to the intraday time frames, 90, 45, 15, 5 minute. Let's look on the daily here. We already know because we looked at this already, right? We're up here above, reverse wave trend again. It's going to make a push up here, in my opinion. Going to test that lower level first, whether it be, what was it? Whether it be like 41.5 area or 41.2, 41. You could even say 41K, right? That is literally the center of the new daily range is 41.89. So this is a ton of volatility. In my opinion, the bears are not going to be able to push through this. This didn't happen. This didn't happen for no reason. They're trying to push this back up to the top side. And I've been talking about it for weeks. I fully expect if BTC can close a weekly candle. Guys, I've been talking about it since this week. If BTC can close a weekly candle above the mean of the projection from the 41K low. People are like, well, what's the difference there? That's just, I mean, there's no difference. Look, I'm not making freaking support and resistance lines at the bottom of data sets. That's not where the mean is. The mean is up into the beef of the candle. This is the distribution. We don't create support and resistance lines off of data sets. Volatility is creating these data sets. Volatility is what? It's volatile. It can change in a heartbeat. That's why that shit never holds for people, right? That's why that shit never holds for people at all. Period. Just like people are probably back here, right? They're making data sets like right here. Oh, that one got busted. And then they're like, okay, well, this one won't break here. Right? And had a little rejection that just busted right through. A new all-time high. Bunch of shorts got liquidated. I remember. Just insanity. BTC can close a weekly candle up above the mean here this week. If BTC makes a run at the 2SD and the 95.4 Laplace up there around 45K, above 40, if BTC can close around above 45K this week, it's only a matter of time before the top side of the 68.3 gets tested again, and that's about $58,000. And it's right below the mean of the projection from the 60 to 29K dump. So let's pay attention to that. Let's see how that works out, right? Okie doke. Okay, let's see here. So the variance on the daily, right, with that candle yesterday, it was heading up negatively correlated. Boop, it changed, right? That heavy volatility came in and went positively correlated. There's another thing that's good to run this thing up and close the weekly above there. The log return Z-score literally had an outlier below the 95. Didn't quite get down to the 99, but it is down there. Here's a good thing though, right? Look at the BTC data set. As of right now, it's a lower high. But there isn't actually a high yet, but that's what it's shaping up to be. But look at the returns oscillator. It's also a lower high. So they're on the daily. There's no divergence. There's no hidden bear or bear divergence, right? On any of the oscillators. That's powerful. That's powerful for this return oscillator. And that's what I'm even saying. Maybe it doesn't even happen today. Maybe we just go sideways because there is a pretty big daily range. And this daily return oscillator just has a nice little reset to the top of the zero mean, right? Comes down here and just sets up for a bounce off the zero mean. Boop, pop to the top side from there. We'll have to see how that plays out. We're significantly positively correlated with the historical volatility Z-score. That Z-score needs to turn back to the top side. Negatively correlated contracting volatility going into the new day. That's okay for a move to the top side. We are expanding though a little bit here. So either when this volatility comes in, if you see this entropy percentile expand, if this correlation doesn't break, we're probably going to move. This thing could roll over again and we could be right back down there, 38, something like that. Okay, 90-minute chart. Let's see here. Dun, dun. Check something real quick. Oh, all right. Let's see. Variance. It's in the doghouse. Let's be fair. I'll tell you what. There is definitely. Hmm. Yeah, there's bull div on the returns oscillator. I could crank that down to even a lower length, and we probably see another set right here. That's okay. And it's looking like on the 90-minute, like this first standard deviation on the Fishers, it's going to hold. There is no, there was a little bit of bear div right here, right on the 90. Well, played out, right? Got this higher data set right here. High, lower high, high, higher high. Boop, 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 boop. Down we go. That divergence has played out, my opinion. Let's see if this 90-minute returns oscillator can stay to the top side here, especially if this thing drops down to 41.5, 41.2, and it stays up there. Then we get a bounce off of that zero mean as well. It's good. Look at the volatility on the 90-minute, 3 percentile, very low, heading into positive correlation, which is good. And what usually happens when you get contraction negatively correlated? Usually ebb and flows into a pump, an expansion positively correlated. The historical volatility z-score can keep coming down negatively correlated. That is fine for a move to the top side. But you're going to want to see if it's a heavy move up to like that 43.5, maybe the first standard deviation, you'll see this go back into trend, get bright blue again. You can see we're starting to expand on the entropy percentile. The correlation broke. Boop. And if you want to learn how to read all this, go to a 1-minute freaking chart and just watch it in real time, how the correlation breaks. Breaks a lot, right? Let's go down in 1 minute. Look at the correlation, guys. Look at the entropy percentile, expansion and contraction, and all the breaks and correlation. You can watch that in real time, big time. Like right now, this thing's coming. It was positively correlated. All right. It's contracting now, negatively correlated. That's usually going to evolve into a pump. We'll see. But we're talking a 1 minute, though. Could be a $50 or $100 move. That's why if you're ever trading a 1 minute chart, number one, you need to be on an exchange where your maker orders, there's zero fees, right? You got to get that out of the way first. I know FTX runs a good thing. You stake 25 FTX tokens if you're allowed to trade on that exchange, of course. Zero maker fees. That's a great deal. There's also some exchanges out there. You can ask Yasha, he knows a couple of them where I'm pretty sure you just pay a monthly fee for unlimited trades, right? It's real low. It's not even a lot of money, but as long as they're makers, right? You're not marketing. You are setting limit orders. Do you think professional traders are out there predominantly market ordering? No. They use retail traders as liquidity. They're the makers, right? Talk to P Funk. If you guys don't know what P Funk, he was a market maker in NASDAQ. That's why you see him in the chats. He understands this. He's stoked he found us. You can't find this stuff anywhere else on YouTube, man. Nobody is teaching this stuff. And how many views do we get on YouTube? Does it bruise our egos or anything? No, because none of us we're not like that at all. When people find alpha trading, we invite them in with open arms. You found us for a reason because 99.99% of your brethren are out there trading shit indicators and watching YouTube Jimmy. That's just that is the harsh truth about this scam going on. Industry-wide scam. And so, but YouTube Jimmy will look at people like Alpha Trading and will be like, "Oh, those guys don't know what they're talking about." Do you really think those guys are trading? If you do, I just bought a bunch of property in Florida, right? I think I've got like 10 acres of swampland. I'll sell it to you for a couple Catalina whales. I got swampland I'll sell you in Florida. If you believe these YouTube Jimmies actually trade, they're lying to you. They're using you as liquidity. You're buying their freaking trading programs or their trading psychology programs, right? You're paying for their like little signals channels and shit. It's a joke. These guys are clueless about the markets. If anything, they have two accounts. They have an account where they are long, and they have an account that they will short. And what accounts, what wins do you think they show? If there's a big move coming, these goofballs will literally long it and short it. Trading is not how they make money. You need to understand that. They make money by YouTube clicks and you buying their bullshit programs. Wake up, people. Wake up. There's very few, very few. If there's anybody out there on YouTube and they're using traditional TA and they're talking literally about trading and what they think the market's doing, it's a total scam. Now, the YouTube channels that are out there and they just talk about the news, like what's going on in Bitcoin land? Is there any news? What's going on with the big bank? Shit like that. Hey, man, go listen to them. You might learn something. Maybe they find something that you haven't seen. But you know me, I could care shit less about any of the news. It's all bullshit anyway. But sometimes it's cool stuff to learn about. You never know. But majority of them, it's all bullshit. It's all bullshit. I see these guys getting tens of thousands of views. Their freaking thumbnails change every day. The YouTube Jimmy is as big of a lagger as the indicators they use, right? It goes hand in hand. They have no fucking idea what's about ready to happen in the market because they're using lagging indicators. We don't use lagging indicators here. Here's the thing though. Volatility is volatile. Those indicators can change in a heartbeat because these things are on point. That's why you need to learn. If you're intraday trading, you need to learn how to immediately look at the 4 hour. Start to get a bias as you drop down to the 90, to the 45, to the 15, and the 5 minute. And when you can figure out how to do that and how to read each one of those charts and create a whole, it's going to change your trading career. It'll make everything come clear. That's when you start getting great entries. Because out of that bias at the beginning of that intraday of trading, you are going to know which way. Where do you want to allocate all your capital? To the top side on those 5 minute scalps or to the downside on those 5 minute scalps? We counter trend trade. But if I'm trading with that bias of whatever the trend I think is, I'm using my full account, zero leverage. If I'm counter trading that bias, I'm using a third or a quarter of that. Because listen, yeah, I'm not that person that's always has to be in a trade. But when you're an intraday trader, that's your job. Your job is to trade that intraday data set. So you're taking every trade you can get your hands on. But then I'm good turning off the charts, taking a few days off. I'm not that crackhead that has to be in a swing trade constantly, getting my account liquidated all the time. That's where these people, and you'll hear old Jimmy talk about it. Well, if you really want to be safe, you should probably just trade the high time frames. You should just we're above the 200 MA now. It's probably a good thing. We're probably going back to the old yellow 21 up there. It's probably a good 4 hour swing trade, right? You come back, your account's liquidated because it freaking breaks the 200 and goes the other way. It's a joke. You cannot swing trade Bitcoin. Wake up. You cannot macro time frame trade Bitcoin. Look, you know what the best trade is? Just be a holder, man. Every week, buy some Bitcoin. Never financial advice. If I did not do what I do now, that's what I would be doing. I'd be buying little chunks of Bitcoin. I don't even have to look at the fucking price. I don't care what the price is. I know in 10 years, Bitcoin's going to be over $1 million. So does it matter at 41,000? No, it doesn't. You can set up most of these on ramps. You can set up where you can buy 100, 200, $500 a week of Bitcoin. Boom, they just pull it right out of your bank account, throw $500 of Bitcoin into your account. Right? Then once a week, you go into there because what do we not do? We don't leave our Bitcoin, our cryptocurrency on these exchanges. We put them in a hardware wallet, right? We lock them away, but don't get confused. Your crypto's always on the blockchain, right? Hardware wallets are just the second layer of security. People cannot steal your funds unless you literally are one of those people out there, because we got a lot of book smart people out there that got zero common sense, zero street smarts. I read it in discords across the range every day. People, they just have to click on every link. Oh, this guy said I was getting this free shit, so I got to click on it, dude. They get keylogged. They get you click on bad exchanges, and they drain your accounts. There's scams out there where they literally, hey, you won this. Well, all you got to do is put in your 20 word seed phrase and we'll deposit it right in your account. Do you know how many dumbasses literally do that? God, guys. There's a reason why crypto is the most heavily scammed freaking industry in the world, because people fall for it one after another. Phishing scams and all kinds of crap. Look, if I can give you any advice, I'll tell you. Nothing is free in this world, right? Stop clicking on every link. I don't click on anything. Zero. Unless I know the person it's coming from. And that's literally right now, probably about 5 people that I trust even click on a link. Keep yourself safe out there, guys. Keep yourself safe. It's very dangerous in cryptocurrency. I mean, I got we'll just say an acquaintance, right? When you start, people don't understand what it means to become your own bank, right? They think it's easy. Everybody wants to be your own bank until you're your own bank. And then you start crying. Well, this isn't what I thought it was going to be. I was like, what? You don't think being your own bank, the security of your own bank is up to you? You think anybody else gives a flying shit about your security? They're out there they're gonna take advantage of you, right? When you're your own bank, the security of everything in your bank is 100% up to you and nobody else. That's just the harsh truth of it. You got to protect yourself. And that goes for, look, focus, stop clicking on links. Every freaking scam out there will give you this free shit, this free, boom, boom, everything's free. You're going to get wrecked. You're going to get wrecked. Like I was saying, got an acquaintance. Another thing, you need to double, triple. Hell, if your dogs can read numbers and letters, have them check the addresses when you're doing crypto transfers. Don't ever trust copy paste. Copy paste it and then visually match them up. Make sure you're sending your crypto to the right place. Because somebody I know just sent 140 Solana into the fucking Etherverse. Gone. Asking me, is there anything I can do about it? You're fucked, my friend. You just lost $12,000, $13,000. I'm sorry. I gotta go, Bilbo. I'm about to puke. It's like, I'm sure you are. Sorry, friend. But shit like that happens every day, man. It's insanity. You have to be careful. And that's what we're gonna wrap it up today, saying that. Be careful out there. Crypto's full of scammers, right? Learn how to volatility trade. Do not swing trade Bitcoin. You are asking to get wrecked. Yeah. You're welcome, Takumi. Bitcoin was not made to swing trade. It is the most volatile asset out there. You don't swing trade volatility. Period. The end. It's a no-brainer. And people that start to study this way of trading understand that almost immediately, especially when you show them how powerful it is using volatility, probability, and statistics to volatility trade those low time frames. Where YouTube Jimmy will be like, hey, don't trade the low time frame volatility. Literally. They say it all the time, right? Crypto caveman out there. Y'all know who I'm talking about. He tells his people in the Discord, don't don't scalp the low time frame volatility. It's dangerous. It's like, are you like, what is happening right now? That's exactly what you're supposed to do. That's what volatility trading's all about. Where is all the volatility? Where are the algorithms trading? The 15 and 5-minute chart. That's where they're trading, right? And when you have the right tool bag that's going to give you insight into what those algorithms are thinking, and then you understand the divergence between price action and returns, it's telling you that the return on your investment is diminishing. We're not using stupid ass RSI, Stokes, MACD, divergence. What good is that? It's zero good. It's all about the returns. That's all it's about. We're here to help you. And if you want that help, the link to our Discord is in the description of all of our videos. Come into the Alpha Trading Discord. Look in the shop channel. It's gonna show you that there's two different levels of our Discord, right? There is a paywall. There's a reason for it too, because there's a lot of haters out there. We got to keep out the riffraff, man. Got to keep out the riffraff. These two different levels in our Discord get you access to a part of the Alpha Trading system. Open up a support ticket. Tell us what's on your mind. If you have any questions you want to ask, it doesn't cost you a dime. Open a support ticket. If you want a little example, we can hang out down in the waiting room chat, and we can show you anything you want to see. If you need, if not watching one of these videos doesn't like clue you in that you've been misled, whatever you need, we'll show you. But you guys, we're trying to help people. You don't ever hear me shilling shit. We don't have any links. We're not trying to on ramp people onto leveraged exchanges. We're not selling any trading programs. You come into the Alpha Trading Discord and you get access to the Alpha Trading system. You get taught for free. It just makes zero sense the way these other people operate. And they're getting all the clowns, right? Everybody's flooding to them and just getting wrecked. So we just laugh about it. But do that. Be wise. And I want to thank all you guys listening live in the Discord. That's another advantage of being part of the Alpha Trading Discord. You get to watch these live streams 5 days a week, Monday through Friday. Sometimes the time changes up a little bit. It's usually right at about 2 p.m. Pacific Standard Time. Sometimes when there's a lot of stuff going on in the market, I might push it back to the daily close because I want to see where that new daily volatility range is. But with all that being said, wherever you live at, in this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. We'll see you tomorrow, 2 p.m. Pacific Standard Time. See you guys.